tracking a steep straight sell-off as investors worry about the global inflation, China's zero COVID-19 policy, and the Ukraine war, as well the safe haven dollar eased up. Now, European equities market at the moment is in for another rough day. The pan-region Euro Stock 50 futures fell 0.152%. And the German DAX futures were down 0.63%. Now, the FTSE futures were 0.5% higher, and although S&P 500 futures S&P 500 futures reversed early losses to be 0.05% higher. Overnight on Wall Street, retail giant Target Co. warned of a bigger margin hit due to rising costs, as it's reportedly that its quarterly profit had halved. Its shares plunged 24.8%. The Nasdaq fell almost 5%. S&P 500 lost 4%. MSCI's broadest index of Asian Pacific shares outside Japan snapped 4 days of gains and slumped 1.8%, dragged down by 1.5% loss for Australia's resource-heavy index, a 2.1% drop in Hong Kong stocks, and a 0.3% retreat in mainland China's blue chip. Japan's Nikkei shed 1.7%. Tech giant listed Hong Kong and were partly hard, with the index falling more than 3%. Tencent sank more than 6% after it reported no revenue growth in the first quarter, its worst performance since going public in 2004. The evidence of red-hot inflation seeping into U.S. economy is sending a chill through investors after major U.S. retailers showed people are cutting back on buying bigger ticket items as they just try to get by. Investors wiped almost 25% target of its profit after as it had to discount bigger terms. And Walmart had dropped more than 17% since it reported weak results early on Tuesday. Target earnings showed consumers spending more on food and household essentials instead of high-margin discretionary items, while Walmart showed shoppers move to buy lower-margin basics. Investors today are focused on earnings due to Cohill, which fell 11% on Wednesday, and BJ's Wholesale Club, which fell 16%. Russia will send any oil rejected by European countries to Asia and other regions. Well, that's the latest words from the Deputy Prime Minister, Alexandra Novak, today, adding that Europe will have to find substitute supplies that will be more expensive. The European Commission on Wednesday unveiled a $210 billion plan for Europe to end its reliance on Russian fossil fuels by 2027 and to use the pivot away from Moscow to quicken its transition to green energy. Europe receives about 4 million barrels per day of Russian oil. Deputy Prime Minister Alexandra Novak says, adding that Russia is ready to reroute those supplies, leaving Europe with more expensive crude from their origins. He says Russian oil production was about 1 million barrels per day lower in April, but had increased by 200,000 and 300,000 barrels per day in May, with more volumes expected to be restored next month. And oil prices on the international market rose today, recovering from early losses on hopes that planned easing of restrictions in Shanghai could improve fuel demand, while lingering concerns over tight global supplies outweighs fears of slower economic growth. Now, U.S. West Texas Intermediate crude recorded a price dip of 0.06% to hit $109.50 per barrel. Brent sells at $109.60, registering an upward price margin of 0.46%. Bonnie Light's performance has lost some steam, trading in the red territory with a price decline of 3.86% to sell at $113.60 per barrel. For the OPEC basket, crude oil dealers offer $117.20, recording an uptick of 3.65%.